And in terms of those brands, what kind of size businesses is Wayflyer focused on?
Yeah, it really ranges. Like there's a huge range of businesses that Wayflyer funds, whether that's anything from $10,000 per month all the way up to a brand doing like hundreds of millions per year, which has been the case a few times. So we kind of split them into three different categories. It could be like a startup, and then like kind of growing, one that's starting to find its feet, starting to become a bit more predictable, starting to understand the inventory cycle a little bit better, maybe branching out into different channels of sales outside of their normal Shopify store. That would be kind of in the middle ground. That probably starts at around I don't know, 250K per month. And then the next one up would be kind of like big enterprise brands who might have like their own stores, a very strong omni-channel presence, internationalized. Yeah, so those kind of those three groups really.
Okay. And in terms of the process for funding, what does that look like? And is that the same for those different groups that you just mentioned?
It used to be, but it's recently changed now that we have kind of a suite of different financial products for different stages of the business. When Wayflyer started, the way it would work was this kind of like traditional revenue based financing type thing where you would pay back a percentage of your daily sales. So, your sales could ebb and flow. On a good day, you might pay back a bit more to Wayflyer, and on a bad day, pay back a little bit less. But I think when brands start to become a little bit bigger and more predictable, they like to have kind of a more fixed option there. So that's recently been introduced where brands can, instead of choosing this kind of percentage of daily sales, they can choose like a weekly or a bi-weekly for Amazon specifically because they get Amazon payouts, or even I believe like sometimes monthly fixed payback. So there is a definitely, as Wayflyer has matured and has a lot more experience with customers, they've adjusted some of the financial products to suit different business needs. Whether that's the platform like Amazon, which you only get your payout bi-weekly, so therefore the payback to Wayflyer needs to be different, or the size of the brand. But in terms of the general process, how Wayflyer works over a traditional bank is that we're able to connect our platform into your whole ecosystem for your brand. So whether that's your Shopify store, your Amazon Seller Central account, Google Ads, Google Analytics, Meta Ads, these are can all be connected into the Wayflyer platform. And then our kind of underwriting algorithm is able to analyze all of that data and get like a really, really, really strong picture of the health and the trajectory of your business, and then funding decisions will be based on that. And not only does that mean that it's much more accurate than a bank, but it's also a lot faster. And it's also, which we kind of skip over this a lot, but it's also a lot more accessible as well. Because you might see some people talk about alternative financing and say, oh, that's so expensive. Why don't I just go to the bank? But the problem is the bank aren't going to give you money. Like you've only been in business for 2 years. As far as they're concerned, you could go bust tomorrow. They don't have the capabilities to analyze the data and see your trajectory. And you might be able to get some money off them perhaps, but you're not going to be able to get as much money as you need to capture that full potential that Wayflyer can see.
Okay. You mentioned the kind of speed point there. What is a kind of typical length of transaction for you guys, and maybe talk to some of the quicker ones?
Yeah, I actually was chatting to a customer the other day, and he said he's involved in bar supplies, so bar equipment for um, bartenders and bars across the states. And he was saying that his first experience with Wayflyer, he had been over in China talking to a supplier, and this was post COVID when bars were starting to open up. So he went over to China to inform his manufacturers that he needed to scale up production by 50 or 60% to meet the demand. And he remembers walking out of the meeting in Shanghai with his manufacturers and thinking like, God, now the next problem here is how the hell am I going to pay for this massive ramp up in production? And he got on the phone to Wayflyer, and they had an initial call or whatever. And he said that by the time he boarded his flight back to the US, that the money had already been sorted out for him. So I'm not sure how many days that was, 1 or 2 days that this guy was able to like totally fix his whole scaling trouble before he'd even come back from meeting his supplier. But There's definitely some companies that can be done in like 24 to 48 hours if they're like very very clean and like everything looks goes to plan and stuff, and maybe they don't have such a complex um, system going on.
Okay, and if you were talking to a bank, you'd probably still be on hold at that point, right?
100%. Like another example would be like a golf ball brand in Ireland of who I've spoken to previously, and unexpectedly some influencer reviewed their golf ball and gave it a rave review. So all of a sudden he is in his house going, oh shit, what am I going to do here? This is brilliant, but at the same time I need to urgently get some money because I'm going to sell out way quicker than I expected to. So that's also another type of situation where you can't go to the bank and explain this, and then you're going to get, oh please sir, can you print? Will you have to sign this sheet? We're going to print out, and then we're going to send post to your house, and you'll sign that, and you return that. No, it's just not realistic. So, in order to capitalize on random opportunities that might crop up like that, Wayflyer, there's nobody better than Wayflyer can get it done. If you have this specific request and we can see that this is a legitimate need for funding, they can do it. Like they can give you a decision within 24 hours, 48 hours.
Why is it possible to move that fast, especially when you compare that to traditional financing options on the market?
It's the fundamental understanding of e-commerce and the underwriting model that they've built up over this number of years. It's probably it's probably at a point now where you probably can tell pretty much straight away. Such is the advancement of the underwriting model in Wayflyer. That's pretty much why. Like there's no banks just haven't really moved into this space and tried to understand the e-commerce business model.
Okay. I think when I spoke to someone on the team before, they mentioned there was kind of four data points that the model
Mm.
looks at. Can you just talk to that? I think it was looking at the online store, marketing spend, the kind of accounting setup, and the banking software.
Yeah. Yeah, they would be the that would probably be that would be the four platforms that you would need to connect. I think they're the four things that give someone like a really holistic view of the health of the business. But in terms of that, they're not that's not necessarily like what the decisions are based on. The decisions are based on certain figures that can be extrapolated from having those multiple platforms connected. So like for example, I talked previously about unit economics. I think that's probably one of the first things that our underwriters will look at. It's like, okay, what is their gross margin, what is their net margin here? Like a healthy gross margin in e-commerce should probably be around like 60 to 75. If you've got maybe like a gross margin of 30-40%, it's probably not going to happen for you. You probably need to make some changes or up your price or reduce your cost of goods. So that unit economics piece is one, but then it's also like how much are you paying to acquire a customer, and how much value will that customer give you. So that's a metric called like CAC to LTV, customer acquisition cost to lifetime value. If I am, and this is a perfect example to explain this, like if I am selling chairs on the internet, and I am selling the chair for $100, and it's costing me $70 of ad spend to sell that chair, I'm left with $30, which isn't that much. And also, no one's going to buy another chair from me for another 2 or 3 years. So the LTV is extremely low. Whereas, you know, I was recently chatting to a beverage brand in the US who sell their drinks online, doing extremely well. They would actually spend about maybe $50 on acquiring a customer, and the sale is $50. So you'd look at that and be like, oh, they're making no money. That's crap. But then you look at their LTV throughout the year, and it's averaging each customer that they acquire, it's averaging three more purchases throughout that year, if you know what I mean. So, while it might not look at it on the when you first look at it, but that's a really really healthy business. Like they're getting customers subscribed, they're paying to get customers subscribed, not making that much money on the first order, but then consistently making more and more orders. More and more money on the next orders that they're not paying for.
Okay, and are these the kind of metrics that Wayfly will then look at in the model to determine the pricing of that financing?
That's a couple of them. Yeah, I'm sure the underwriters could go into a lot more detail
Yeah.
than I can, but that's one. I think like having a healthy cash buffer in your bank as well is probably a good sign. That's something that that they've said to me before when I've I'm also a Wayflyer customer, but so you need to keep your bank account like a little bit more topped up.
Okay. I know you said earlier there were kind of different maturity stages, different businesses at different maturity stages that Wayfly can kind of work with. Could you just talk to that and maybe explain, the product suite or the product that goes along with that stage in the life cycle?
Yeah. So again, I will keep this pretty top level because not the best person to go into the ins and outs of the financing terms. Definitely, Wayflyer has recently launched something called multi fund, which is this like suite of different financing products. And they're kind of suited to each stage of the journey. So for the first stage of the journey, that's kind of like a startup brand doing probably between $10,000 to $100,000 per month. And when you're starting out, it can be very unpredictable. Your sales can fluctuate from day to day. It would be quite stressful potentially and risky if you had fixed payments on this. So this is where that revenue based financing model works a lot better, where we can analyze your daily Shopify sales. You pay back each day as a percentage of your daily sales. So that tends to suit that stage. And then as companies kind of mature and become more predictable, they would have something that might be like weekly fixed or something like that, and that's usually better when you might have like different channels working together. You might have some retail partners as well, which are providing more of a steady income. You better understand um, your ads, how your ads are performing, and your ads are more predictable. So that's better for that stage. And then I think when you reach a certain stage, which you're doing maybe over 1 million a month, possibly even more, you would kind of graduate as an enterprise customer. And here is when we can kind of set a certain amount that's going to be accessible to you whenever you want it. So almost like a line of credit essentially. And you can draw from it according to your inventory needs at that time. And you'll always know how much you can kind of draw out. So that tends to be the solution that works best for these like larger customers. So yeah, different kind of products tailored for the different stages of the journey.